This is the vlog for Tuesday, July 10th, 2018 for Blue Heron traders. And we're looking at just Pepsi and Celgene right now on the scanners. Pepsi has earnings related bump, really good earnings release this morning. So we'll be watching that. Looks like there's a lot of trader interest in that right now. And then Celgene's got some patent or some medication trial announcements. So we'll see what pops up later. It's still week after holiday, still doldrums. I still haven't seen as much pre-market movement as we did in the week leading up to the holiday. So, but we did okay yesterday, and we'll just keep plugging ahead. So be back later. Okay, going ahead and calling it here. This has been a very, very slow day. The usual kind of trader haven stocks that you expect to see having a lot of movement, a lot of volume, haven't really shown up. We mentioned Pepsi had popped on news this morning, but I mean, it's Pepsi. The problem you run into is when you have big stocks that are basically institutional stocks. This is where companies park their money, and they don't like volatility. So you actually find there's a lot of just smooth movement, nothing discernible as far as patterns. If you do start seeing a pattern, very often it might not be what you think it is. You get more certainty to your patterns when you have higher volatility and more trader involvement. So what we found basically came from I think Rig might have been on the Gapper, and I did trade Rig, but the others came off the relative volume scanner. So did 3 trades today. As you can see, this was well, it would have, without commissions. There's a lot of commissions on this one, and we'll go through why. It would have been positive, but with it was slightly negative. Usually, if it's a situation like that, it's a wash. Comes out to about 20 down on the day. We gained a little bit yesterday. We gave a little tiny bit of it back today, and we're gonna just say that that's a break even. So let's go into it. So 3 trades on the day, and honestly, I mean, this one, the Celgene, I was stopped out. The other 2, I mean, they weren't losers. Let's go into what happened with them. All right. So first was Rig, Transocean, and kind of a mark of how slim the pickings were that I watched this one for a while. And, okay, obviously the way I have it marked up here, I'm calling this a Head and Shoulders. And, somebody who's read the book or whatever, traded with me might look at this and say, hey, this is not a Head and Shoulders. It's got a big dip in it right here. Head and Shoulders can have what I call a cloven head. Just, is a split in the head. That doesn't change the fact that they can act as Head and Shoulders. So what we have an obvious shoulder over here. We can connect our neckline, and we have our other shoulder over here. So it meets the criteria in that the neckline, since this is a standard, it's going to be dropping. So our armpit over here is lower than our armpit. Our shoulder top over here is lower than our shoulder top. And so I kind of waited for that sign that we were dropping, and it was playing around up here. I went ahead and I sold short here. And I think I did, as you can see, this is a low price stock. I did 1,000 shares. Well, it's got a pretty good range though. So I mean, 5 cents at 1,000 shares is $50. So comes down, challenges the neckline, and we kind of get to this point, and I'm getting a little antsy, and I'm sure you can probably see why. You got a line here that's acting as support. Does seem like there's a line here acting as resistance. That's starting to look an awful lot like a descending wedge, and we know what happens to descending wedges. Boom, to the moon. Well, or at least boom somewhat. Anyway, point is that I decided to lessen my exposure in case there was a sudden spike up. So I bought to cover half of my shares right here at a very small profit. And so I was 500 shares in. Then I got the drop I was expecting. So I'm selling short again here. Well, why is that? Again, averaging down. I'm already in the position. This was not a complete sellout. So, my entry point was 500 shares up here. So, okay, I buy in another 500 shares here, and now it's down here, and I move my stop loss with it. And my stop loss has to get closer to my buy-in because my overall position is larger. Remember, you can buy in more shares as long as you are not increasing your risk. That's non-aggressive. So, I bought in, I sold short, I should say. Those who know me know when I'm entering a trade, to me it's buying in, whether I'm buying or selling. My brain's full of a lot of stuff, so I try to just have one word for two meanings. I apologize for that. All right. So I sold short here a little bit more. We came down and we made this low. And this is where this trade took the turn for not being a loser, but for a break even. We came back up from the low. Well, this I consider a retraction. At this point, I'm 1,000 shares. I'm back to having 1,000 shares in this stock. I guess these were probably 250 buy-ins then. No, you know what it was? I default to 400 shares. I'd meant to buy 5. This was a 4. Sell short. This was a 4, so I added another 100 short shares. So this was 5 total. So I went ahead. I'm 1,000 shares in. I've got to pull back, and I sold short another 1,000 shares, so that I was 2,000 shares in. Well, look at this. I mean, that's not even $30,000. But because this is a pretty good range, if this goes down and gets to my low again, which would have been my first profit target, that would actually have been a $160 play. So what happened? Well, I brought my stop loss down. My buy-in now is down around here. Right about here. So I set my stop loss a little lower to cover for the ask bid spread, so that I'm a break even. And when I sold short those 1,000 shares, the price was here. My stop loss was up here, and as you can see, it did just get hit. So I got stopped out right here, all 2,000 shares. No loss other than commission. And you remember there were quite a few commissions on this trade because of all this buying and selling. And that's fine because look, I mean, this is probably going to be the low of the day at this point. We had lost volume. We just weren't getting anywhere. It's a head and shoulders. We expected that this distance here would be our price target, which takes us back actually to the close of the day. So that brings up an interesting point, and I've been asked this question before. A lot of traders will put lines on their chart in the pre-market when they find the stocks they want to trade, signifying previous day's close, moving averages, possibly highs and lows of the previous day. And they'll kind of expect to see price hang up at these lines. And they're not wrong. Price will hang up at those lines. But what I have discovered is that the patterns themselves will tend to build themselves upon these lines. So, I don't find it necessary to going and putting them in. As long as I know what my profit targets should be, here, this head and shoulders had set itself up for its natural profit target to be a natural line of resistance at the previous day's close. That's just how it works. You see it again and again with these things. Triangles that end on important daily levels from the day before, or descending wedges that are following a moving average. So I believe in less is more. I don't like the clutter. I leave the lines alone. Sometimes they're not important. Sometimes they are. I let the patterns show me when they are. So, again, this was my target. Didn't make it. You know, volume is what volume is. Just wasn't going there. Okay, enough time on that. Let's go to Checkpoint software. So Checkpoint, I'm going to have to zoom in on. So you can see from the open, it had actually gapped up, crashed back with profit taking, and then it had been just building up. But we got right around 11 o'clock, which, 10:45 to 11, kind of common to see reversals in stock trends. So we started building something, and I'm going to have to zoom in a good deal more for it to really be obvious. And actually, this is a tricky zoom. So, all right, here we go. Okay, so what we really have at the top of this, what I'm looking at, is an inverse head and shoulders. So we have this point here. And yes, this is in very small scale, but these are still a 5 cent chart. It's just the movements are odd. But this is a head right here, or so this is a shoulder, and this comes up, and again we got a cloven head, and this was our other armpit right here. So here is actually, excuse me, I called this an inverse head and shoulders. This is not. This is a regular head and shoulders. So this should be a reversal to the down, which I'm kind of expecting to see. So I'm willing to go ahead and look at this. So this is our armpit. We come back up to form our other shoulder, and we were kind of just going sideways for a few minutes. And I like to see a definite sign that this is my top level. And I went ahead and sold short at the end of this. We dropped back to the neckline, and it's not uncommon to hit the neckline and have some trouble crossing it. I expected to get this, which is about a 15-cent profit. But we just kind of came up here, formed another top, went sideways, and volume just was gone. There just wasn't any. So I recognized this was out of pattern. This wasn't anything I needed to be in. And I went ahead and bought to cover for a very slight gain. And that was that. All right, final trade was Celgene. Celgene is one that I can kick myself in the butt a little bit if I want to, because I missed a beautiful bear triangle right here. You see it? Look at this. 1, 2, 3, and they all line up perfectly flat. 1, 2, 3. You got this nice slope right here. This is a beautiful bear triangle, and I just didn't see it. I was skipping through other stocks. I was, whatever, not paying attention, and I didn't see this. This would have been a great point right there to go short, because your stop loss would have been up here, and that's just, 7 cents? Your stop loss would have been right there. Let's say 10, because you're going to have some slippage. And you come down here, you break, you expect to get this much, and if you look at the break, you did eventually. That'd have been a hell of a play. Didn't happen because I didn't see it. Oh well. Comes down, and then I get what I think, and I had these all drawn up. I thought we were going to see a symmetrical triangle that was demonstrating a continuation of the downtrend. I would have played that to the short, except we got this, and all of a sudden now it looks like an inverse head and shoulders. Okay, I'm looking at the stock. It's kind of rotating around a central point. I could see a reverse going back up to it, which is kind of what we got. So we come back down, and I went ahead and bought down here because it looked like the high. So my stop loss would have been here, because this would have been the level where it overtops the other head, or undertops it in the case of an inverse, and then we're out of pattern. So as you can see, this is the candlestick where we hit, and I got stopped out. So I got stopped out for 44.33. Right now, what is it forming? This is a great learning opportunity. What is it forming? So it's kind of, just to draw, and we'll assume what's happening right now is a breakdown. let's kind of just draw it as if it's a pattern. We don't know if this is or not. We kind of have this widening thing. When you see this, when you see a pattern where it is widening, even if you want to include this, don't touch it. You have no idea what is going on here. This particular pin, there's a name for it, and I don't even know it because all I know is you don't trade it. You have no idea what's happening to this price. Now, if you start to see a trade or a pattern you recognize developing within it somewhere, all right, well, maybe now you have an idea. But just this thing that looks like this ever-increasing shotgun blast, no touch. All right, so that was it. This was the one stop out. The other one was kind of a breakdown in my profit taking, and it was a situation that was fine. I want to go back and look at that. It was fine. Like I said, I doubled my position right here, which took my stop loss to this point for a break even. We had reached this low. We had done a pullback. It looked as if we were being drawn towards the previous day's close. So there was every reason to suspect that we might at least hit this low again. So what I was doing by going 2,000 shares in, I was foregoing the profit I'd already made, which wasn't huge, by saying either we're going to go down and match this again, in which I'd start taking profits, and if it continued down, I'd hold on, but if it kept up, I'd go ahead and cover it all, or I'm going to get stopped out for no loss. And if you can put yourself in those situations, well, sometimes they're going to go your way, sometimes they're not. But just being in those situations where you have nothing to lose and money to gain, hey, who wouldn't take those all day long? I know this guy would. All right, that's it. Talked your ear off enough. Be back tomorrow. Have a good night.